So FFVC is one of the largest seed stage VCs in the country by head count. We're 24 people in Midtown Manhattan and Hoboken. We are investing now out of our third fund, and we are fortunate to have had some great success with companies like Indiegogo, 500px, Clout, which exited Lithium, Quigo, which exited AOL for north of $340 million, Cornerstone On Demand, which is now a multi-billion-dollar public company, and a whole host of others, 69 companies since 2008. We invest across the country as well as outside the US. We have 3 investments in Israel, 2 in Canada, 1 in the UK, 1 in Amsterdam even, and hopefully more in Amsterdam, thanks to Arjun and team. So there are a couple of things that are unusual about FF. First is the size. The reason for that size is we are very interested in increasing the odds that our portfolio companies become successful. We have full-time staff to help our companies with accounting to make sure books and records are in order. So we act as an outsourced CFO for 26 of our portfolio companies. We do financial modeling for them. We help them in building out a recruiting process that works. We have a full-time person to help with PR and communications. We have someone to help connect you with the tech community pertinent for where you are. All the services for companies are free, except for the financial modeling and accounting services. For that, we charge at cost, which means about 30% below market. So from the point of view of the typical individual entrepreneur who's raising capital, your choices are individual angel with a checkbook, small VC with an admin, or FFVC with 24 people that has been doing this for 69 companies since 2008. So that's not usually a difficult choice. People are usually pretty interested in getting involved with us. And one of the results of that infrastructure that we bring to bear is a relatively low failure rate. We just tipped over in a double-digit number of write-offs in our history, which is a pretty low rate of failure. That will certainly go up over time. But we think it reflects the extensive due diligence we put our companies through, and then once we invest, the ways in which we add value. We invest in all sectors outside of life sciences, mostly software, but some hardware as well. So one obvious question is, what do we invest in? So there's a generic list of questions that every VC has on their website, right? We're looking for barriers to entry in a strong team, blah, blah, blah. So I'm not going to talk about that, because you know all that. I'll talk about a few filters that are unique to FF. One is we avoid what we call Seinfeld companies, which are companies that serve the needs of the urban 20-something single male. Anyone here in that class? Too embarrassed to raise your hand? So the entrepreneurial class is disproportionately urban 20-something single males. So you would be amazed at how many apps I've seen that tell you which bar has a higher ratio female on a Friday night. You laugh, but these are real apps. Now, I don't... Even when I was single, I actually did not filter for parties on that metric because the assumption was like, how many women can you talk with? But apparently, for a certain category of engineer, this is a real pain point, and they figure if there are more women, their odds go up. Questionable at best, if that is good logic, but there are people who think that way, and they build startups, and then we turn them down for funding. Another filter is we avoid hot sectors. If everyone's excited about a given space, if all the brand name VCs are clustering in, and it's all over Twitter, we say we're nervous. The valuations are up, CEO egos are up, not for us. So that's why we have no daily deals companies, which was a red hot space, now stone cold. We have no subscription commerce companies, was red hot, now stone cold. Bitcoin, right? Right at that tipping point, it's about to go stone cold. We have no Bitcoin companies. So we're interested in identifying the companies that are going to be the leaders of the next great growth sector. When we invested in Indiegogo, no one had heard of crowdfunding. When we invested in Interaxon, which makes a brain-sensing headset, wearables was not the red-hot space that it is today. So we think that that model is one of the things that has helped to produce a pretty good track record in working with a whole host of companies. Questions?
The size of your investment?
Yeah, so we typically invest at valuations below $5 million pre-money. Typical check size is under 500K. But we do invest at much later rounds as a company gets more developed. In the case of Cornerstone On Demand, we invested in them 8 times over the course of their history, right from the 4 people in a room round to the pre-IPO round, which is unusual in the world of early stage VC. I should mention as well that the other hat I wear is I'm founder and chairman emeritus of Harvard Business School Alumni Angels of New York, which is now the 2nd largest angel group in New York, on track to be #1, not that we're competitive. We are part of the International Harvard Business School Angels Group. We have very active chapters in London, Paris, Sao Paulo, Beijing, a number of other major cities globally. We are all Harvard affiliates, but we invest in companies blind to university affiliation. In fact, if anything, we have a bias against the Harvard grads because of the ego problem. So I certainly encourage you to look at that as well as a source of capital. Other questions? Yes. Yes, I mentioned that we invested so far in Israel, Canada, Amsterdam, UK. We would invest in companies that have US ties and whose technology is neutral, meaning it's applicable to the world. In the case of Interaxon, they make brain sensing technology. The whole world hopefully has a brain, and therefore they can use it. I will stay around afterward. Thank you very much for your time.
Thank you very much.